Hey traders, welcome back to this week's weekly Forex forecast. Last week we had the dollar breaking the major high highlighted in prior videos, and we actually closed the week above there. We had this strength coming in, and one of the reasons why we drove through this and we closed above it was because of the plethora of negative PMIs that came out of Europe and also the UK at the back end of the week. Now it's important to take note of that because that is going to affect the portfolio selection coming into this upcoming week. And we're going to discuss that a little bit more in today's video. But heading into next week, the question is, can the DXY sustain itself above this level, or is it going to consolidate underneath the level because it's quite extended here and then start to break out? Either way, I do see the dollar heading much higher. Dollar long plays relative to other currencies are my top theme in the Forex markets heading into next week. And the upside target in the dollar index next week is the 108.54. The downside, if we pull back and we breach the 106.43, this is where I'll be looking to time some of those dollar longs. And all of this is going to be coming up in more detail in today's video. Okay, so moving on to the portfolio selection as always, and you can see the US dollar is sitting at the #1 spot. This is still my favorite theme heading into next week, and we're going to be looking at dollar long themes in today's video as well. And also the Japanese yen still sits at #2. Now the Japanese yen was something highlighted in last week's video as starting to show some relative outperformance here, something we want to be looking for potential long opportunities. Often people ask, the setups that we're looking at in the video, are these what we're doing in the real-time setups with members? Yes, they are. This is an example exactly from last week, just as we were looking at long bias in the Japanese yen. The Swiss franc was also a relatively strong currency we were looking at, but when you get two strong currencies, they tend to range. And as soon as we took out the upper bound in Swiss franc, Japanese yen last week, this was a double top short. You can see in the picture when I say to you I'm looking for those reversal patterns, and we had a nice 1 to 2 day reversal to the downside. So keep that in mind when we go through the video, because this is the exact type of setup that I'm going to be highlighting in today's video with the markets that we're looking at. So if we continue down, you can see the Swiss franc now is sitting at #3. So again, we go into this week where I'm primarily looking for long positions in US dollar, Japanese yen, and the Swiss franc. And to the downside, the euro. We just looked at that poor data coming out of both France and Germany at the end of last week. So the euro is my #1 favorite short. The New Zealand dollar sits at #2. Just bear in mind, we have an interest rate decision out of New Zealand next week. So I'm going to be primarily looking at trading the New Zealand dollar pairs that we look at in today's video from Wednesday onwards. So after the interest rate decision takes place. And then we have the third option. So do we look to short the Canadian dollar, maybe the Aussie dollar, or the pound dollar? Well, the Canadian dollar is troughing and reversing in the performance metrics. So I would prefer, one of these two. We did have hotter than expected Canadian inflation coming out last week, and this is supportive of the CAD. Now, we also had that with the pound. However, right at the end of the week, we got those PMIs, and actually this reversed that strength in the pound. And we started to see weakness coming in. So personally speaking, I would like to take, alongside the euro, the pound as the third best short theme heading into this week. That means we're going to be looking at euro dollar to the downside, New Zealand dollar to the downside, and we're also going to look at pound dollar to the downside. We're also going to look at EurYen to the downside, New Zealand yen to the downside. I also like pound yen to the downside. And we're going to look at the franc pairs. I much prefer US dollar and Japanese yen longs, but also on my watch list as a third best setup is going to be the Swiss franc relative to the euro. So we'll look at EurFrank to the downside, New Zealand franc to the downside, and also pound franc to the downside. Okay, so kicking off the watch list then, as always with crude oil, and you can see we've got the weekly projected ranges here in the hedge dash algorithm. Between the blue levels, we roughly have a 70% chance of staying between these. And the gold levels, we have roughly a 95% chance. So if we breach the blue levels, we are oversold or overbought during the week. And if we breach the gold levels, we are extremely oversold and overbought during the week. So coming into this week, the thing I've noticed recently with crude oil is it's been a really good short for quite a while. We've been looking to the short side, looking to the short side. And what's struck me recently is this failure to come down and take out this low. Now, as this keeps trying to push lower, and push lower, shorts are going to lose confidence when this fails to take out the low, and they're going to start pulling their positions. And so going into next week, I do favor shorts on balance. However, I'm a little bit wary of shorting crude oil next week because When you get these kind of failures to drive the price lower, shorts can pull their positions quite quickly, and we could see this with a kind of technical catalyst pushing into the second upper bound. And if it breaks this high after failing to make a new low, you could actually start to get a third wave to the upside. Now, we also have a fundamental or a potential fundamental catalyst with any kind of escalation between Russia and Ukraine. So going into next week, I am looking for short positions on balance, but I have to be honest with you, if there's other setups, I will probably leave shorts in crude oil unless the setup is, really good at the time. So going into next week on balance, because we do crude oil every single week, doesn't mean I'm going to trade it every single week, but on balance, I am only looking for short opportunities. If we breach the 74.16, we turn overbought intra-week, I will consider dropping down, looking for those reversal patterns, just like we looked at the beginning of the video, that real-time setup from last week posted to members, pushed above the franc yen high, and then we start to double top, and that reversal was the opportunity. Very much like with crude oil. If we breach here, I'm not going to necessarily short straight away. I'm going to stop. I'm going to look for momentum to fade. I'm going to look for those reversal patterns. I'm going to look for a 1 or 2 day reversal to the downside. If we blast through here, whether I'm short already or not, this would be the second place I'd be looking for a 1 or 2 day reversal. So the third thing then you can look for is you start to pull back. Instead of getting to the upper bound, you can look for the breach of the moving average. You start to make your way up, maybe fail at this high, and then you start to break back down. The moving average follows it, and that gives you your intra-week opportunity for a bear flag down to the lower bound and kind of the range bottom here at the 68.19. So on balance, I would favor really with crude oil only shorting above the upper bound or the second upper bound next week. And I think given the chance, I'll trade other things. Okay, so kicking off the Forex universe then with my favorite pair next week, which is euro dollar. You can see the liquidation we got. This kind of almost capitulation we got at the end of last week with those very, very weak PMIs out of France and Germany and also Europe in general. And so going into next week, I can only be short or do nothing, cannot buy euro dollar. When you get this kind of sell-off and liquidation, usually that's followed by a correction. So I would maybe even kind of filter out any midweek opportunities because after this kind of move, it tends to correct and pull back. What I would like to see primarily, just as we looked at earlier on in the video with franc yen, is if we pull back and breach the upper bound at the 1.0540. If we do that, we turn into this kind of box between the blue and the gold levels. This is essentially the sell zone. Once we pull into here next week, and of course they update every week, you get new ranges every week. But once we push through here, we start to get into a position where we've got roughly a 30% chance of continuing in this area and roughly a 70% chance of moving back inside the range. So if we breach this, I'm going to drop down, I'm going to look for those reversal patterns, double top, look for momentum to fade, look for a head and shoulders, and I'm going to be looking for a 1 or 2 day liquidation, again, just as we looked at earlier on with franc yen. If we blast through here, and sometimes when this happens, I'm already short here, and I'm looking to short again above this level, and essentially cost average my initial losing position. I usually short again up here, and as it pulls back, I exit either for a small loss or for break even. But sometimes I'm not involved already, and it blasts through, takes out the second upper bound, and perhaps this low over here, and then this sets up a fantastic initial opportunity to go long or short because you have roughly only a 5% chance of continuing outside of these gold levels within a week. That doesn't tend to happen unless you have a catalyst, expected or unexpected, like gold last week with the ATACMS and the storm shadows going into Russia from Ukraine. That was an example of an unexpected catalyst, push gold to its second upper bound. We'll talk about that later on in the video when we look at gold and silver. But coming into this week, I can either be short or do nothing. The third and final thing, as always, if we do correct and we start to make our way towards the upper bound and we kind of, maybe we start to fail at these lows, instead of taking out the upper bound, look for the liquidation back down below the moving average. It turns, and you tend to get in the 4 hours one of these kind of bear flag setups or bull flag setups within the week. Very much like this, breaks down below the average, pulls back, hugs it, and then you get the next leg down. Hugs it, next leg down. Next is euro yen. I can once again either be short or do nothing. I cannot buy this market. A Japanese yen long plays on a relative basis was something highlighted in last week's video. We got the nice sell-off in a lot of these currencies. Franc yen took out the upper bound. CAD yen took out the upper bound as well. You could have shorted CAD yen. I chose franc yen. But you can see coming into this week, we've still got this momentum, still only looking for short opportunities. So any pullback in EurYen, what I'd like to see is I'd like to see it trade above the 163.68. This is where we start to enter the sell zone. We start to get the odds turning in our favor for a reversal. Going to be looking for momentum to fade, looking for those reversal patterns for a 1 or 2 day liquidation. If we blast through here, take out the 166.10, and probably in that scenario we'd take out the prior high as well. This would be the second place. Whether I'm short already or not, I would look for a potential short opportunity and a 1 or 2 day reversal. And the third and final thing is you can look for the bear flag setup in this case, where you start to correct above the moving average. It fails to take out this upper bound, and instead it liquidates back down below the moving average. The moving average follows it, and then you get that first hug into the moving average and a move away into the lower bound. Profit taking target for next week would be the 158.83 for any intra-week shorts in EurYen next week. And the final euro pair is EurFrank. Again, look at the liquidation we got last week, and you can see what I was talking about. When you get this kind of, essentially it's a near-term capitulation low. I do think we're going to continue lower, but as soon as you get that kind of capitulation, you tend to see a snapback and a correction first. You're seeing that more apparent here in EurFrank. So I would like to see this pulling back. Preferably, I would like to see EurFrank trading above the 0.9398, because then it's doing the opposite of what we're looking for. You're looking for this to continue lower over the next couple of weeks. It's now moving higher, and so we're looking at this essentially as a mispricing. It moves into the sell zone, and this is where I would start to look for reversal patterns to the downside for a 1 or 2 day liquidation. If we blast through here and take out the 0.9478, although I don't expect it to do that, if we get an unexpected catalyst which drives it into there, this would be the second place. Whether I'm already short or not, I would be looking for a potential 1 or 2 day reversal. And the third and final thing, as always, is look for the attempt to move higher and then the sell-off back down below the moving average. The moving average turns, pulls back into it, hugs it, and you get that bear flag set up, that first test and move away into the lower bound here at the 0.9238. Great profit taking target to the downside for intra-week shorts in EurFrank next week. Okay, so moving on to the New Zealand dollar short theme, just bear in mind we have that interest rate decision on Wednesday, expected to be a 50 basis point cut, and I'm going to show you the 3 different scenarios going to be looking for post the interest rate decision on Wednesday. So first and foremost, we get a consensus outcome. In other words, maybe we get a 50 basis point cut, and because it's expected, not really too much happens straight away. You just see the market chopping around and it becomes somewhat of a non-event. In a non-event, what I'm going to be looking for is just the standard opportunity where I'll be looking for the market to pull back, breach the 0.5913. We've got a really nice high over here, and we also have a low over here. And so this is a nice area of support and resistance, as well as the place where we start to move into the sell zone, essentially, where we become overbought intra-week. So in that scenario, I'm going to be looking just as normal as if there wasn't an event for a 1 or 2 day reversal. The next outcome is if we get a very bearish outcome for the New Zealand dollar. So in other words, the market's correcting and chopping because into interest rate decisions, these currencies tend to not do much. So it's chopping around, and then what happens is you get the interest rate decision on Wednesday, and the outcome is negative for the New Zealand, and you see it breaking down straight away. In that scenario, you can go to your intra-week setup where you get that bear flag off of the interest rate decision, look for the pullback, maybe Thursday, and then you can look for the follow through down to the profit taking target at 0.5753. And the third and final scenario, of course, is a bullish outcome. So let's say, for example, I'm not saying they will do this, but let's say theoretically they decided not to cut rates at all, and a 50 basis point cut is expected. This would be very bullish for the New Zealand dollar. In that scenario, you might see it fly up, and I would be looking at that and thinking maybe it's not a great idea to short the initial lower bound here, because now we've got a catalyst, right? In this case would be an unexpected catalyst. When you get those, you can see these markets moving to their gold levels. So I might filter that out, if I'm proficient at it and it, I don't get involved and I'm not on the wrong side of it and it blasts through, and then you get the opportunity to fade. So I can still only be short New Zealand dollar. I can't buy it regardless of the interest rate decision next week. I can either short it or do nothing. So if we blast through on a hawkish outcome, a bullish outcome for the New Zealand dollar, maybe they cut less than expected, I would be looking for a potential 1 or 2 day reversal above the 0.59940. So bear those 3 setups in mind, because that's exactly what I'm going to be looking at at all of the New Zealand dollar pairs for next week. Next is New Zealand yen. Again, I can either short it or do nothing. Buying this market is not an option for me next week. If we get a neutral outcome, I'm just going to be looking for the standard setup, a break above the 92.46, moving into the sell zone. We're taking out prior highs, nice key area of resistance here as well. I'm going to look for momentum to fade, and I'm going to look for those reversal patterns. And then I'm going to look for that 1 or 2 day reversal from above this level. If we start to get a bearish outcome from the New Zealand dollar, again, look for the market to chop around and do nothing. Then you get the initial sell-off on the interest rate decision. Be patient, wait for the pullback, and you can look to see if you can get that bear flag set up and follow through, in this case, into the 88.93. And what works on the upside works on the downside, right? Once you enter into this area, you effectively enter the buy zone. However, the only buying I would be doing is to buy back any short. So I'm not looking to establish a long position, but if I'm short intra-week and it comes down, I could buy that back. In other words, the profit taking zone. And the third and final thing, if we get a very, although it's unexpected, a kind of hawkish outcome or bullish outcome from the New Zealand dollar, and we blast all the way through into the second upper bound at the 94.22. This would be the second place. I'd be looking for a 1 or 2 day reversal. You know, maybe I get involved. I don't think it's as bullish as it is. I short here, it blasts through. This would then be the second place I'd look to short just to cost average that initial position. And finally, we have New Zealand franc. Again, a neutral outcome. It's a non-event. It just means I'm looking for the standard setup, which would be above the 0.5290. Looking for momentum to fade and looking for a 1 or 2 day reversal back inside the range by the end of the week. If we get a bearish outcome, you can look for the bear flag setup. So it's just kind of chopping around. Then you get that initial liquidation from the interest rate decision. Look for it to pull back and correct. The moving average, follows it back down. And then you get that follow through down below the 0.5138. That'd be a great profit taking zone if we start to trade below this area next week. And the third and final thing, if we get an unexpected hawkish outcome and we're nimble enough to avoid the initial upper bound, shorting it here and then it moving against us. If we trade above the 0.5365, whether I'm already short or hopefully not in that case, this would be a great place also to look for a 1 or 2 day reversal to the downside. Okay, so wrapping up the Forex universe with the pound short theme, which I like also heading into next week. You see we've broken down with momentum. What I would like to see in pound dollar, I can either short it or do nothing. I'd like to see it break above the 1.2667. This enters the sell zone. We turn overbought intra-week. And what would be fantastic if we traded above that and then took out this high. Now we've got confluence of being in the sell zone and testing a resistance area, which can also push it lower. So that would be a fantastic setup. I'd like to see that. I would absolutely be looking for reversal patterns and a 1 or 2 day reversal in that scenario. If we blast through here, as unexpected as it is, but we blast through here, maybe even test the underside of these lows, this would be the second place, whether I'm short already or not, that I'd be looking for a 1 or 2 day reversal to the downside. And you can see we've already got momentum to the downside here. Perhaps we pull back, we start to flag, maybe even just test this low, and then we start to trade back down below the moving average. The moving average follows. Again, it's a bit smoother than that, of course, but the moving average follows. You get the pullback and you get that bear flag set up, in this case, into the lower bound, essentially the buy zone, but it's only a buy zone for me in terms of booking profits on shorts, and that's below the 1.2393. Next is pound yen. Again, I can short or do nothing next week. I want to see it pulling back and breaching the 197.12. Again, we have a really nice high here. So we start to trade into the sell zone between these two levels and we start hitting prior highs. This is going to be where I'm going to preferably be looking for head and shoulders, a reversal pattern, double top reversal pattern, going to start to look for momentum to fade and then a 1 or 2 day liquidation. If we blast through there and take out the 200.30, as unexpected as it is, as a backup plan, this would be the second place I'd be looking for a 1 or 2 day reversal, because the odds, once you get above this level or below this level, the gold level, of reversing back inside this range here is about 95%. That's what the market is currently pricing. So those are the two places I'd be looking for short-term opportunities next week to the downside. And the third and final thing is you break above the moving average, you liquidate back below it, and that sets up your bear flag setup back into the moving average and then away down to the 190.75. great profit taking target for next week for any intra-week shorts. And last, and in this case, in some sense least, because I do like the other markets better, we have pound franc. I want to see this already breaking above its moving average. I want to see it continue. I want to see it take out the 1.1328, especially if it starts to take out this high and this high. This is going to be a great place next week in this sell zone to start to look for a head and shoulders, double top for a 1 or 2 day reversal. If it blasts through here and tests the 1.1453, whether I'm already short or not, this would be the second place. I'd be looking for a reversal pattern, a 1 or 2 day reversal. And the third and final thing, of course, tracks up and then it breaks back down below with momentum. The moving average follows it. You get that bear flag set up intra-week, in this case down to the profit taking target, the 1.1079. Okay, so wrapping up the video with gold and silver, and going into next week, we have quite a nice setup where we can trade gold to the upside and potentially silver to the downside, because usually you have a stronger dollar, this suppresses both gold and silver at the same time. And if you have a weaker dollar, this supports both gold and silver. However, gold has a quality to it that silver doesn't, and that is it has the safe haven asset quality. And last week, we saw gold move into its second upper bound. I actually shorted it last week and it started to move against me. And this is an example of an unexpected catalyst. So often I'll say to you guys, you can go to the second upper and lower bounds, the gold levels, on a catalyst, expected or unexpected. Expected is like the interest rate decision out of New Zealand next week. It's in the calendar. We know it's coming. And as a result, we can just sidestep it and we can trade after it. Unexpected is very much like last week with the strike from Ukraine into Russia using ATACMS first, so the US made missile systems, and then also the British Storm Shadow ones. And this is what caused a flight safety into gold. And whereas we saw silver acting normally in the sense that you have a stronger dollar and the silver price struggles to rally, we saw both gold and the dollar going up together last week because of that safe haven quality that gold has. So coming into this week, I am going to be reactively looking at trading gold to the upside, given the chance. I'd like to see it pull back because this is just straight line in. Markets don't move in a straight line. I'd like to see it pull back. If it breaches the 2677, we start to enter the buy zone. This is where I'll be looking for a potential 1 or 2 day reversal to the upside. If we come all the way back down, seems unlikely, but if we do take out the 2638.56, this would be the second place, whether I'm long already or not from this area, that I'd be looking for a potential 1 or 2 day reversal to the upside in gold. And the third and final thing, of course, you start to flag, pull back, and then you break back above the moving average. It follows, and then you get the bull flag set up into the moving average. And in this case, profit taking target to the upside would be 2754.83. And last but not least, we have silver. Now, because we still have a stronger dollar and I have a bias to the upside in the dollar, this still gives me a short bias in silver. So now we can play it reactively, whereas if they both kind of sell off, I can look to buy gold. If they both rally, I can look to short silver. So any pullback in silver above the 32.16, especially if we start to trade into these lows, this is going to be an area. I'm not going to jump straight in, but I'm going to start to look. If we enter the sell zone, I'm going to start to look for potential momentum to fade, for reversal patterns, and I'm going to see if we can get that 1 or 2 day liquidation. If we blast through and take out the 32.98, this is where we become extremely overbought intra-week and where I'd be looking for an opportunity to the short side, whether I'm already short or not. And the third and final thing is we just continue to kind of bear flag and correct, and then we break down intra-week, look for the moving average to kind of follow it, and you get that pullback and bear flag set up, in this case, down to and below the 30.52, which is a great profit taking target for any intra-week shorts in silver. So that is it from me for today, guys. As always, I hope you enjoyed today's video, and if you did, why not consider joining us in the GMT training room each day, where I look at the best markets as well as sharing real-time setups that I'm personally looking at trading with members as part of our GMT training program. Don't forget, you can also get a 2-week free trial to the cutting-edge hedge-trading app used in today's video by heading over to www.hedge-.com. Access to the cutting-edge hedge